In recent days, I've shown you this chart where I've marked the first rate cut in 2007 over here, 2000 over here, Fed funds rate below with the cuts, how it's been associated with the market pricing in the recession and the Fed cutting to combat the recession, caused the crash, but it was associated with it. I'm gonna in this video, I'm gonna blow these areas up, and I'm gonna show you what to expect exactly. Show you day by day how we've gotten a pullback just ahead of the Fed and then a big rally for about 3.5 weeks. And again, in 2000, the market had peaked ahead of the first rate cut in 2001, and that we got about a 3-week bounce or 19 days. We have something more similar to 7 where we topped with the rate cut. And again, we rallied for 17 sessions, about 3.5 weeks. That was followed by a 20% crash and the ushering in of the bear market. I'm going to be showing you these charts. I'm going to be showing you them up close, talking about them, putting that together with some other charts. Make sure you watch the video all the way through. Support the channel with the link directly below. If you like the charts, you like the indicators, please support the channel. If you could take a moment to do that, I would really, really appreciate it. I do need to hear from you in order to make it work. Take a moment. Support what we're trying to do here, bringing you this cutting edge information. I'd be very, very grateful. A lot of time and effort to do this. You can help out. The link below to take you to a secured site. But if you can help out with a donation at this time, I would really, really appreciate that. I have changed my mind. I believe the Fed is going to cut by 50 basis points. I didn't think so before. After looking at things and historically looking at previous cuts, I think they're going to go ahead and do it. 2001, they started with a 50 basis point cut. They did in 2007. Right now, there's a 53% chance that we get a 0.25%, a 47% chance after the market closed that we get a 50 basis point cut. I think by next week, this will go higher, and we will end up getting a 50 basis point cut. I think the Fed is going to go and do it, even though, and it has been, have had the 50 basis point cut higher than the quarter. The Fed's going to go ahead and do it. Even if they don't, it doesn't really matter, but I think that they're going to do that. I just wanted to clarify that because a lot of the sell-off that we've been getting is, oh, the Fed's not going to, with the jobs were, oh, the Fed's not going to cut by 50 basis points. Market has these high expectations. I think the Fed is going to go ahead and meet this one now. I have completely changed my mind on that. Wanted to let you know. Studying the past rate cutting cycles, and we began with the 50 basis point rate cut in 2001 and in 2007. Again, those wishing for a 50 basis point cut, well, if the Fed goes ahead and does it, what does that say about the economy? What does that say about the economy? So I think they're going to do it. I think we'll get a Fed pivot rally, not a Fed pivot crash, a Fed pivot rally to a new all-time high on the S&P. I think NASDAQ will fill that gap. We'll complete the topping process, a double top where S&P goes slightly higher, NASDAQ makes a slightly lower high. I think you're going to usher in the bear market. These trend lines that I've been talking about, if you watch the video all the way through, you'll see trend lines. When I'm showing you these charts up close, so cut in 2001, it was a series of 50 basis point cuts over and over again. Now, again, the Fed right now, I'm going to drop rates to nothing as people are hoping for. It's going to drop them back to zero. They can't do that. Inflation will come back. I think they're going to get a 50 basis point cut. I did not think that before. I have changed my mind. Just looking at some of the history here, and again, because I think that things are worse than people think. Powell has expressed concerns over the summer about the economy, showing concern from time to time, but I think they're going to end up doing this. And regardless of the Fed cutting rates with the herd believes it's going to be bullish. You have some of them saying, well, they've done it sooner. You're going to have more and more people going, oh, the Fed should have listened to me. They should have cut rates. We wouldn't have a recession. Balderdash, poppycock, and falderall. These policies lead to negative outcomes. We're going to have a recession. The inverted yield curve now, it's uninverting, it's predicting it. An employment rate with the Psalm rule is predicting it, and other indicators going to have it. My video last weekend, market is so overpriced right now. It'd be a great reset. If you saw last weekend, you saw the Buffett indicator, market cap to GDP. There's a Buffett indicator, and you saw the Shiller P ratio. Both of them are predicting crashes in the market. Both of them are predicting market valuations, predicting low returns for the next decade, low or negative returns for the next decade. I'm not going to be wrong. Again, here we have the 50 basis point, whoops, I didn't draw that very straight, the 50 basis point cut to kick things off. I think the Fed is going to do that. I think you'll see that increase going into next week. Have some volatility just ahead of the Fed doing the cut. Watch the video all the way through. You'll see historically that's what's happened. And then, or we've gone flat or a little bit of volatility. We had a rally going into it right now, the week, which has historically happened as well. I think we're going to go higher, but peak mid to early October, probably sometime between October 11th to October 15th. You'll see why. Guarantee, give or take on those days. I have the guts to tell you exactly what I think, and I'm just basing that on historic data and some of the trend lines that I've been talking to you about in the weekly and the monthly time frame. I model on the NASDAQ with the ABC move. So if you watch the video all the way through, you'll be in the know and you'll see what I'm talking about. At the cut, start with 50 basis points in 2001, January 3rd. And if we move cuts that took place from 2007 to 2008, 2007, again, it also started with the 50 basis point cut here. Started getting after that the 25 basis points, but then we had the jumbo cut as we moved to the financial crisis, subprime mortgage crisis, later the Lehman moment there, some jumbo cuts. Fed's not going to do that right now. I'm not saying they won't do it later. I believe we're going to have another banking crisis. And the Fed needs a recession to deal with, needs a recession to help with the inflation problem. Get it, then again, can be more flexible with cutting rates if we start the recession, which again, they know is going to happen. We all know it's going to happen. Yellen out there again, Treasury Secretary Yellen telling us, oh, it's not going to happen. We're going to have this soft landing. And this is just propaganda. I've changed my mind. This is taking place, these 50 basis point cuts. So I think that's probably going to be the case. I think that number will increase. The Fed fund futures, and we'll get the 50 basis point cuts. The market will celebrate for a few weeks. We'll get a Fed pivot rally. The market's going to top and reverse. The divergence is on the weekly charts with the S&P 500, and we'll get the lower high on the NASDAQ. There's people telling us there's no possible way markets are going to sell off with it because everybody believes it's all bullish, ushering the new bull market, and hearing the nonsense of this soft landing business on the financial channels, so-called experts selling into the rally, dishing out the Kool-Aid. Retail investors are drinking it up, slapping each other on the back, saying, buy the dip. Buy the dip isn't going to work in the bear market. A friend that did that, buying the dip, and it eventually wiped him out. And the thing of the tech bubble, because he kept believing it was over. I want to let you know I changed my mind about the 50 basis point cut. I think that the Fed will rise back up to that by next week. The Fed will do it. I think that will fuel the excuse for the rally that I think will give us a Fed pivot rally for a few weeks. But again, I do believe the market will likely peak early to mid-October, probably sometime between October 11th and October 15th. Based on the historical data, it doesn't have to be perfect, but again, I have the guts to tell you exactly what I think. But I think that he's going to rally towards trend lines I've been talking about. Probably if we hit the first one, the 750, 800 area. If we hit the second trend line on the monthly chart, maybe 59, 6,000, and you'll see all of that in this video. As of the market closed just moments ago, slightly changed, 53% that we get a 0.25% cut. Again, this could change. It's expected at the November meeting that we're going to get 0.5%. This could change to 0.5%. It's over 50% of that. And then at the December meeting, there's a 40.4% chance that we'll get another 0.5% cut. Where it stands now, and again, I've changed my mind about the cut here. So I think the Fed is going to give the markets what they've been hoping for, and we've seen this bounce back and forth from a 0.5% cut to a 0.5% cut to a 0.25% cut. We've seen it bounce around. I think that will change by early next week, and the Fed will go ahead and do a 50 basis point cut. I just want to show you this chart really fast. Down here I have the Fed funds rate. Up here I have the S&P 500 weekly chart. Currently where we are right now, these are the previous bear markets that have been associated with the Fed pivot. The Fed pivot does not cause the crash. It's a trigger for it. The Fed starts lowering rates, beginning to combat the coming recession, and the market begins to price in the recession. So the Fed pivot, the lowering the rates, it doesn't cause the stock market to crash. The market's doing exactly what the Fed is doing, reacting to a coming recession. But here we've now seen the Fed pause July 26, 2033. Nope, 2023. Wrong date there. So let me just fix that. That was 416 days ago, as I've talked about so many times. Again, I look at the length of the pause from when the Fed first pauses to the pivot where they begin to cut. Pause is bullish. The pivot is bearish. Over here, it was 7 months, 19 days, 233 days. Over here, it's more similar to what we have right now, 447 days, 1 year, 2 months, and 21 days, which, again, we are getting close to that now. We're just over a year now. And, again, we're going to get that cut September. So, again, the pause, you can see the rate, the Fed funds rate, it goes flatlined. They begin to do the cut. And the market will likely go to a new high with our current levels just ahead of the Fed meeting. It's going to be very similar to what we had over here where we had the top. And I'm going to show you these tops right here up close and personal so you can see exactly what happened. You need to watch this video all the way through. But again, we're likely going to witness a stock market top, reversal, usher in a bear market crash. S&P will likely move to new highs. Now, showing you this chart, I'm going to show you this up close. Okay, I'm going to show you exactly what happened up close and personal here, but I just want to review this real fast because I'm going to show you each of these peaks and what happened. This is the Fed funds rate down here. Again, the Fed began to cut. 2007, we rallied for about 3.5 weeks. We formed a double top, and it was followed by a 20% crash over the next several weeks. Got a rebound. The bottom fell out of the stock market. We ended up dropping 58%. 2000. With the rate cuts, we went to a new high, but then we topped October 11th. I'm going to show you this up close so you can see exactly what happened. And this is the weekly chart you're looking at here. And again, we're going back to 2000. Stock market peaked, sold off, eventually went back up and made a lower high, and it began to drop about 19.5%. By the time we got the rate cut, we bounced again for about 3.5 weeks and then got a bigger drop. And again, the bottom fell out of the stock market. We ended up dropping nearly 51%, but they were associated with the tops because the market was pricing in the coming recession and bursting of the tech bubble, followed by the 9/11 attacks. That began to get priced into the market. We had already, by the time the 9/11 attacks had peaked, we are already officially in a bear market. Thing over here with the financial crisis. I'm going to blow these up big, and I want to show you. I think we have a very similar situation to the 2007 top right now. Oh, but before I do that, I wanted to show you this. This is the 3-month Treasury yield. Here in red and in purple, I have the Fed funds rate with that. You can see that here. And here I have the 50-day moving average, the 3-month Treasury yield. And you can see that, again, we've crossed below it. This is warning we're about to get a Fed pivot. We've already seen other central bankers do it, start to lower rates. The Fed is going to do it. You got people out there still saying they're not going to do it. They're going to do it. Again, the dropping of the 3-month Treasury yield, dropping down, warning of a Fed pivot, but also associated with the bear markets, with the yield dropping and the Fed funds rate dropping down. This has been associated with that. So again, this is all telling you it's about to happen. We also know the unemployment rate is predicting, the 3-month moving average of the unemployment rate is predicting we're about to have a recession. Moved up the 3-month moving average has moved up below over the last 12 months. By over 0.5%. We saw that the previous month, and we still have it this month. That's predicting we're going to have a recession. All these people telling us we're not going to have a recession, all these so-called experts on the financial channels and everything, can have a recession. Why are they selling into the rally on NASDAQ? Have we seen the tech sell off? This is telling you that a recession is getting ready to happen very, very soon. This thing hasn't been wrong, and it's marked every recession going back for decades. Right before we get the Fed the Fed pivot starting to cut rates, we get the inverting of the yield curve, and this is telling us recession's about to happen, probably 3 to 6 months away. The market will top out and begin to price that in. There's a NASDAQ down here. When you get the steepening of the yield curve, the market tanking. Historically, that it unfolds. But you got all these experts telling us we're not going to have a recession. These two recessionary indicators I just shown you, and there are others, are telling you we're going to have a recession. Now, let's look at this area right here. The first rate cut January 3rd, 2021. And let's take a look at what happened. The market had already started selling off sharply, 19.5%. The topping process had already completed, but you got about a 3.5 week bounce surrounding the Fed pivot. This up close. Now here I want to show you up close what happened. And again, I'm bringing this up close so you can see exactly what happened. The March peak in 2000, we sold off, we rebounded back up. 5 months later, lower high that completed September 1st into the 2007 top, you had a slightly higher high. 2000 top, you had a slightly lower high. This is because we haven't seen a big sell-off ahead of the Fed meeting that we're probably going to get the higher high scenario like in 2007. The topping process will be associated with the Fed pivot and the coming recession. We had this 19.5% decline before we got the Fed rate cut over here on January 3rd, 2001. You can see exactly what happened. We had a big sell-off, began to rally. Ahead of the Fed pivot, 2 days before, we began to see a sell-off, very similar to what we've had right now. We've had this rally going into the week of the Fed pivot. We could see a pullback, something very similar to this. Got a big rally, just like in 2007 with the Fed rate cut, still below the 50-period moving average, so pull back a little bit more surrounding it, but then got that rally. This rally, counter-trend rally, the market had already peaked up here, but it went on for about 3.5 weeks as well. It went 19 trading sessions. The 2007 rate cut from September 18th went 17 trading sessions. So again, approximately 3.5 weeks or so for both of them, 17 to 19 sessions. If that same thing happens again, doesn't have to play out the exact same way. It could be give or take, but I do think we're in a topping process. I do think the channel trend lines are going to come into play. If we get a big rally on the S&P to new highs, which I believe we're going to, I think we could top in October, early to mid-October. If we go 17 to 19 days, that puts it to October 11th. Have a Friday, then you get a weekend, 12th and 13th, and then the 14th or 15th would be the 15th would be the 19th day. I think that you could see a top in the market early to mid-October, somewhere between October 11th and October 15th, if this same scenario plays out. If this same plays out where you get a Fed pivot rally that goes on for a few weeks and then it fizzles out. I think it's going to be the same myself, but again, just showing you historical data of what has taken place in the past stands to reason it's probably going to do the same thing as the market begins to price in recession, as the Fed begins to aggressively cut because they know recession is coming. Can't come out and say, oh no, we're going to have a soft landing. They can't come out and say, hey, we're going to have a recession. But 17 to 19 trading sessions later, you saw this lower high right here in 2001, and you saw market top out 2007, 17 days later, again, both about 3.5 weeks or so, give or take. It's very reasonable. We're going to go up and hit that upper channel line in the monthly time frame, which I've been showing you. We're seeing in this video again, go into the 5750 to 6,000 level or so and top out. Probably in either late September or early October. My guess would be early to mid-October. My guess would be sometime mid to early October. Give or take between October 11th and October 15th, you could see a market top. I think NASDAQ has already done so, and I think it will diverge from the S&P. I think when NASDAQ goes back and fills a gap at 20,400, the S&P will be topping about that time. And that's what I'm watching, is when NASDAQ reaches my target level, I'll be looking for a top in the S&P, but I do believe it will be at all-time highs. So again, you do what you want with the information. I'm just telling you historically, the top was already in. We dropped nearly 20%, had a rebound with the Fed, got a Fed pivot rally. Again, had a sell-off right before the Fed pivot, rally with the Fed pivot rally, pullback, and then again a bigger rally. I think you're going to see something like this or something like this. And more likely that, again, the Fed pivot rally gives us a new all-time high and a top. It was 17 days later, 17 sessions, half weeks later, and again a crash followed, over 20% crash that ushered in the bear market. The bear market began 2007 top and the first rate cut. Now, this is the 2007 top. We had a summer sell-off going into Labor Day. We began to rebound ahead of Labor Day, early September. We had some volatility. Right now, we've had a sell-off, a rebound, probably get some volatility early next week ahead of the Fed, flatline one or the other. But this is the Fed rate cut right here in 2007, September 18th, 2007. This is the first cut, and it created a big rally. Okay, and we continued, and then we pulled back a little bit to the 10-period moving average, and we continued up for 17 sessions, or about 3.5 weeks. Again, we're going to get the rate cut the same day, the September 18th. There's no guarantee it plays out exactly the same. Historically, at the 2000 top, or 2001 rate cut and the 2007 rate cut, we rallied for about 3.5 weeks. For about 17 to 19 days or so. 17 days after cut, and then we peaked. We went a little bit higher, and then we saw the bottom begin to fall out of the market. We dropped 20.5% over the next 6 weeks or so. And again, you peaked here on October 11th and down over here. The daily chart we're looking at down over here by late November, 6-7 weeks or so. We dropped over 20%, got the rebound, the last exit point, the last exit, and then the bottom fell out of the stock market going into the financial crisis. It always amazes me, people go, well, we don't have a recession right now. Oh, the market's going to begin to price in the recession. Topping process right now. Oh, we can't have a top. We don't have a recession yet. No, by the time we get the recession, the market will have already started pricing it in. So, this is how people think. We have a crisis right now. The time the crisis already hit in 2008, Lehman moment and all that, the market had already peaked long ago in 2007. It was already in a bear market. So people say, well, we don't have a financial. We're going to have a financial crisis. It's called banking crisis. Okay, that we're going to have because of the banks having a huge exposure to the commercial real estate sector. Is in dire straits right now. It's eventually going to show up in the banks, and you're going to have another crisis along with the recession. And again, this is going to give us the bear market. But again, let me say this. There's a very good shot that the market will peak about a 3.5 week rally or so, give or take, maybe a couple days less, couple days more, who knows. I think you got a shot that the market could peak early to mid-October. I think NASDAQ already has July 10th, as I've made that clear. Between October 11th and October 15th, you got a good shot that we could see a top based on this historical data. Doesn't have to play out the exact same. Telling you that we've rallied for about 3.5 weeks, maybe a little bit less, maybe a little bit more, but I think that at early to mid-October, I think you're going to see a top in the market. I think the S&P will rally with the Fed, and I think we're going to get a repeat performance of what we had here in 2007. I think it will create a top. Ignore this. You could love this. You could do whatever you want with it, but I'm just the Western Union boy, just showing you historically what has happened. We know from the recession indicators, recession is coming. The market will begin to price that in. Majority of the herd, they don't believe that. The herd believes we're going to have this soft landing out of the Fed still. The rate cuts are bullish. Again, the rate cuts are bearish. I've shown you the chart. Going to give us the market top. I think we're going to go a little higher, and if we do go a little higher like this next few weeks and get a Fed pivot rally, as I call it, I think we go up and we slam up into the long-term channel line on the monthly chart about the 5750 area and the 6000 area, which I've talked about at great length and detail. I will briefly show you. Again, that is this channel right here in the monthly time frame. Piece started in 1957, but we can compile the data going all the way back to this 1929 peak. If you take the shadow and exclude it here from the 2000 top, you're coming in at the 5750, 800 area, whether you hit it in October or whether you hit it in September here or October next month, depending on that. This is a monthly time frame we're looking at. If we include the shadow, again, you're looking at the 5850, you're looking at the, mid 58, 59, 6,000 area or so. People going, oh no, we're going to keep going to, 6,500 and 1,000 and 7,000. Well, you got to be able to clear this trend line, and that's not likely going to be the case. It's likely you're going to get a top right here that is going to complete this divergence in the monthly time frame, which it is forming divergence there on the RSI and other indicators. And then we're going to have the bear market that's going to take us back to the pandemic low, probably to this midpoint right here, and then a new bull market at some point. And it's possible we go down as low as 1575, but we'll get a new bull market. We're going to get another bear market. Last weekend, I talked about the valuations, and we know from the valuations we're up, again, nearly with the market cap to GDP, the Buffett indicator, we're at, the 200% level. So we know the market is extremely overvalued, and the Shiller P ratio is above 30. So we know from these valuations showing us that the next decade, the returns are going to be low or negative, and that's because you're going to have a crash or two like we did over here in 2000 and 2007 at those peaks, 1960s and 70s, where, again, you had crashes, 73, 74 crash, 69, I believe it was there. These crashes where you go nowhere, and the long periods of drawdowns in the market. And I think you're going to come back to this midpoint. I think you get another bull market, but we could, once we see these tops, you may not see these tops for a very, very long time. This drawdown was 13 years. This was 16 and a half years. This was 25 years. 1929 top before we started making new highs. That's not possible. Well, you're looking at history right now. You can ignore it. My guess is that the bear market's probably going to end around this trend line right here, maybe as low as this level, but probably one of those two levels, but probably around this trend line near just beyond the pandemic low. I think we'll bounce back up, and then I think you're going to get another bear market, and it's probably going to be surrounding the next bear market's going to be surrounding the debt bomb exploding. Politicians continue to spend like drunken sailors. They're going to end up giving us a major crisis and, again, probably a depression. Economists worth their salt warning that by the 2030s or so, 2030s, we're going to have a depression, 100-year cycle, and all the rest of it. It's going to be the crazy politicians spending like drunken sailors that are going to give it to us. Those are the next two bear markets. Again, this is long-term monthly chart, but eventually I think we come back to this trend line right here and probably this level right here. Maybe it looks more like something like that. I don't know. But again, that's what I think is likely going to be the case. My two favorite economists both are predicting a depression by the 2030s. So again, do what these crazy politicians are doing. I mean, we're now 35, 36 trillion. I mean, it goes up $1 trillion every couple of months now. Can't do this and not have a depression. Do what they're doing and not have a financial crisis. So again, I think we're going to go up into this trend line, and then I think you're going to get your bear market. Again, highly unlikely that we're going to be able to clear this level, and that's going to take us somewhere between 57. Our previous peak was at 5670, and this trend line, depending on when we come into contact with it, either in September, October, either to include the shadow or not, going to take us somewhere. Sorry about that. I had to cough for a second. Still recovering from being sick previously. When I talk a while, I cough every now and then, working it out of my system. Nevertheless, I digress again. Again, depending on when we come into contact with it, either September, late September, or on into October, which I think is more likely. Again, it's going to be somewhere between about the 5750 area to the 6000 area. And then I think S&P will top. You're looking at a monthly chart, long-term channel. Most people in the financial world never look at a monthly chart, have no idea whether we're coming up into this trend line. NASDAQ's already hit its trend line, and the Dow's there, something worth paying attention to. Just quickly, if we look at the NASDAQ, it's already slammed into the monthly trend line. It has slammed into the trend lines in the weekly time frame that I've talked about. I guess as NASDAQ has peaked. If not, again, we could still come up and move slightly higher. But again, I have the guts to actually tell you what I think. And I think NASDAQ peaked July 10th. I told you that on July 11th. And I told you to be watching for it into the trend lines that I've talked about, this being one of them, with the weekly trend lines that rally, lighter volume, surrounding the Independence Day holiday. I talked about this channel on the weekly chart from the pandemic low, perfectly parallel channel. I talked about this trend line and this upper boundary trend line, and they intersected. We just overthrew those levels. About a CPI sell-off, we got that the very next day on July 11th, called the top for that. And again, surrounding these trend lines, surrounding the trend line I just showed you as we slammed into that monthly trend line. I think NASDAQ's topped. I do think NASDAQ will come back up here and test this high and fill the gap, as I've talked about, 1,398. We'll get a double top and get a lower high. If I'm wrong, we'll go up and slam up into this trend line one more time and overthrow it, by the way. Even if we do, again, on when we come into contact with it, September or October, we still may not make a new high. So do keep that in mind. But I do think we're going to fill the gap at 20,400 rounding up. I believe that NASDAQ has already peaked. Wrong. Watch that trend line. Quickly, I just told you last week to be looking for a bottom this week. Confirmed Friday as low as a bottom with that bullish inside day. I talked about that. If you think I'm looking for a crash right now, listening to what I'm saying, I'm looking for a rally, a bottom, and a rally that will eventually take us back up to 20,398 to fill this gap. I think you get a lower high. I think you get a double top. This is my blueprint for what I think is going to go on with NASDAQ. I think S&P will move to a new high, diverge with the NASDAQ as it so often does at turning points. I think the Russell will diverge with the S&P 500 as it does at major tops, and so does Bitcoin, which I've talked about in my videos. Bitcoin is already diverging with the S&P 500. Probably going to both get a Fed pivot rally. Great Scott, did you hear what I just said? They're going to get a Fed pivot rally. If you hear a Fed pivot crash, you're not listening to what I'm saying. A Fed pivot rally that will finish the top, start a reversal, and then begin to usher in the bear market after that. I want to clarify. Had this big rally. We had a sell-off the previous week, 0.89% on the S&P, rebounded back up, recovered the whole thing. I told you I was looking for a bottom. Why? Because I'm looking for an ABC structure. I told you we could either get that bullish inside day on Monday to mark the Friday low as a bottom, or go just a little bit lower like the Russell did, and then turn back up. The Russell went a little bit lower. The others did not. S&P and Russell diverged from one another and marked another bottom. I'll have time to show you. It's the blueprint of what I think is going on, and I think we're in an ABC move, as I've talked about. Now, just quickly, the Dow did hit the trend line here, excluding the shadow there from 1929 and the red channel you see right there. We pretty much slammed up into it, connecting to the 2022 high, just overthrowing the 2000 top. We include the shadow. Again, there's some wiggle room to go just a little bit higher. These are the long-term trend lines. This is a 125-year trend line right here. It's highly unlikely we're going to keep going with the Dow. It's likely that it's topping with the diversions here in the monthly time frame right there. And again, probably going to end up going back to this midpoint area where we bounced off of here after the 2007 top and got a bottom there. 2009 is probably going to be that we're going to go back and test the pandemic low with the Dow and hit this midpoint of the channel into a bear market. Now here's the S&P weekly chart. Again, I think S&P is going to come back and slam up into this trend line. I think the top is going to look very similar to what we had over here. You know, over here we had this drop, over here we had this drop, then we had this run up, then we had this run up, and then you had this divergence right here form, bouncing off the 20-week moving average. Here we're bouncing off the 20-week moving average. And again, I think you're going to come back up into this area and hit this trend line and move, in all likelihood, somewhere between 5750 and 6000. Maybe we overthrow this level a little bit or whatever, but the trend line I'm showing you on the monthly chart, this trend line, these are trend lines that I'm looking at. I've talked so much about, again, I think that this top can look very similar to the top over here. I guess S&P will move to a new high and complete a divergence right here from the July peak. I think that will happen on into early October to mid-October, probably being a peak reached somewhere between October 11th and October 15th, give or take. It could be sooner, it could be a little bit later. It's my window somewhere in October if the rally continues, which I believe it's going to. I think we're going to get the Fed pivot rally and complete the topping process that will be followed by reversal and ushering in of the bear market. Reverse off the major trend lines I'm talking about in this video.